ההקלטה זה, אבל קובי, שים לב שאנחנו רואים את התצוגת מציג שלך, אתה צריך להחליף למעלה בהגדרות תצוגה, או מי שעושה את הפרזנטיישן, אנחנו פשוט רואים את התצוגה עם הערות המציג שלך. הכפתור ליד,
רגע,
הכפתור באמצע של הגדרת תצוגה, בדיוק.
אז צריך אוקיי, עבור
בדיוק על זה.
אוקיי.
מקצוען. שלך, קובי, בהצלחה.
Thank you very much. Hello guys. First of all, I'm very excited because most of the webinars that we are doing for the Israeli ecosystem is in Hebrew. In this time, we are going to conduct this webinar in English because we have a special guest from UK, and it's not obvious because it's his free day. He's not working on Sunday, but I asked James, that is my good friend, to join to this webinar and to give and to share with the audience in the Israeli ecosystem his experience about this whole topic that I'm sure that every kind of startups are a challenge or trying to make all the things in order to bridge the gap of this challenge. And I'll introduce myself shortly and we start immediately on the topic. So first of all, my name is Kobi Kalderon. I'm the co-manager of the Excellence Center of the Entrepreneurship and Startups. With me, Leo Cohen, that is a very well-known professional guy in the Israeli ecosystem that specializes in entrepreneurship and startups, managing with me this Excellence Center in the Israeli Chambers of Information Technology, what we call in Hebrew, לשכת טכנולוגיות המידע. And on top of that, I'm the founder and the CEO of Gold Ventures Investment, that is an advisory company, global advisory company that's based in Austria, in Vienna. I'm talking with you now from Austria, with the aim to help startups in fundraising, obtaining grants and subsidies from the Austrian government, and supporting the startups in global expansion with our global marketing agency, that is Austrian company, that working alongside the Austrian company that focusing on the fundraising. The hot topic that now we want to conduct in this webinar is why startups fail to raise the capital. I'm sure that every startup knows that this is one of the challenging tasks that any kind of founder, any kind of startups facing in the daily basis. And this is something that we are trying in this webinar to clarify what is the right things that we need to do. And especially in this webinar, I want to bring the investors' point of view, because in a daily basis, in the last 10 years, GVI, Gold Ventures Investment, working with a lot of investors, especially in the international market, less than in the Israeli market, but on top of our experience, we understood that there is a lot of things that we would like to share with you in order that you can take it into account. So first of all, I wrote very simple in English in red. If you know what is your weakness are, you can improve your success rate. And this is a very, very important phrase that say that any kind of startups need to be very modest and need to take into consideration what is the weakness in his venture and what is the weakness in his skills in order that he can try to bridge the gap and to take the company to the next level. And in order that we can put the fact in your desk, you already know that most of the startups fail, 90% fail within 5 years in fundraising. And this is something that I didn't bring from my mind. It's something that we have a lot of references that are supporting this assumption. So in order to share with you what we learned over the years, and by the way, I'll be very glad because of that this webinar is very special in this topic. Feel free to ask any kind of questions or to share your experience with the audience. Because I'm sure that there is a lot of people here in this webinar that they have good experience and bad experience. So feel free to write everything on the chat, and then we can, with Leo, we can try to to give other answers or to clarify everything that you wrote in the chat. So what we learned over the years, first of all, we learned that raising fund is not easy task. It's something that every kind of founder need to invest a lot of time to manage, to source the investors that he can find, and to interact with them in order to engage them to their venture. And it's based on knowledge and experience. And some of the times the founders, they have a very, very deep knowledge in technology. And sometimes they know how to bring to the desk their business skills. But I want to tell you from my experience, I'm 64, I'm not a young, that along the years I understood that to deal with investors, and especially now, due to the situation in Israel, due to the situation of the economy situation in the world and in Europe, I think we need to take into account that we need some of the times to get much knowledge how to do it in the right way, and some of the times we need much more experience from different people that can help us during this journey to reach the goal. The second thing is that raising fund must be combined with knowledge and deep preparation. It's not enough that we get the knowledge and we learn how to do it the right way. We need to prepare ourselves for this fundraising process with all the materials and with all the segments that in most cases investors want to see. I have the luck that over the years, I team forces with a lot of venture capital, angels, family offices, especially here in Europe and in the US and Latin America. And we learn what is the most important segments that they taking into account once they coming to invest in companies. And by the way, in the last years, they decided to make like a revision and to update us what is the most important segments that now in this situation that we are facing now in the world, that is much more important for them. So it's always dynamic, it's always change, and we need to be always up to date to understand what is their expectation. The last point that we learn, that raising funds must be combined with comprehensive understanding how to reduce the risk of the investors from their point of view. And in this case, I just want to emphasize that some of the times the founders looking about their venture, about themselves, what they want to bring to the desk. In this phase, in this sentence, what I want to say, in this phrase, what I want to say that some of the times the investor need to change his state of mind and to see the venture from the investor point of view. This is very, very important. Once you understand what the investor looking for from his point of view, not from what you are looking for, this is something that can help you to speak with this investor in the same level and to be on the same page once you are coming to the meeting, the first meeting. And by the way, you can build your positioning before you are coming to the meeting. If you understand what the investor looking for, all your messaging strategy could be changed dramatically if you understand what he's looking for from his point of view. So just for your knowledge, we saw that one of the things that is missing today, when I'm saying missing, I'm talking about the founder startups. What is the three things that are missing today is, first of all, any kind of startups, if it's come from medical devices sectors or any kind of smart city solutions, the investors network is so huge and it covers so much countries. And I'm not talking about only the Israel ecosystem. We are working in GVI in more than 30 countries with 30 partners that managing 6,000 investors in our network. So if you don't have the business network in your LinkedIn or in your personal contacts, it's very hard to engage the investor to you. You need to you get advice, you need to collaborate with companies like, for example, I'm talking about myself, about GVI or other companies in order to reach out to these guys based on a second tier of connection. Some of the times the network is not so huge from your side, so you need to be very modest to extend your network and to work with other partners, with other companies, with other advisors in order to enlarge your network with investors, because in the end of the day, it's very, very hard to find the right investor that could fit to your company, because they are in daily basis, they are overwhelmed with a lot of one-pagers, pitch decks, and some of the time they are missing the opportunities because they get a lot of information, and in order to catch their attention and to bring them to your desk, you need some of the time someone that will push them to set the meetings with you. The second thing that we learn is that all the outreach strategy, I mean, all the messages that you are using, all the emails, some of the times it's cold emails, cold calls that you are using to engage the investor to you, is something that you need to plan in advance. It's not something intuitive that you are saying, okay, this is what I have in my mind, or automatically send an email to vast of investors that are based in different countries. In most cases, it's not work out. The success rate, the retention rate is very, very low. And you can see that once you are trying to do that with automation tools or any kind of systems, in the end of the day, you have less than 1% any kind of response. And in some cases, it's not leading to any kind of significant achievement of raising funds. The last point is a comprehensive reflection of the readiness level of the startup. This is the main idea of this webinar, to talk about what is the readiness level, what is the main factors that the investors taking into account when they want to invest in company. And you need to take into consideration that any parameter is not in the macro level, is in the micro level. You need to understand exactly what you need to show in order that you can build your a position in the right way to be much more appeal to the investor to talk with you and to set up the following meeting after the first meeting. Here you can see list of parameters of what the investor is looking for. And of course, the main idea, of course, is great. The ideation phase, the idea behind, the venture behind, the technology behind. But in the end of the day, it's not only the idea. They want to see in the other way around. They want to see the capability. They want to see the execution skills of the founders, the team. Because, there is a lot of, there's a phrase that investors say there are so much good ideas in the market that we can find, but we don't find the right team that can execute and take these ideas to the execution phase, to the market. So the execution, the ideation is something, two parameters, and you can see in the left side all things that they are looking for. And in the middle, you can see the funding resources that you have already in your startup. And some of the times it's very, very important. The founders not speaking about what they have till now, if they are bootstrapping their startup, how they can roll up their company, how they can engage the partners that working with them. So you need to be very transparent and to speak. If you raise money from friends and family, you need to say how much you raise. If you are working and devoted to your venture full-time, you need to say that you are full-time devoted, not doing something in parallel. And of course, not only about you, about the team. And if there is any debt or any kind of finance issue in your company, you need to reflect it to the investor from the beginning. Because if he found out some things from the finance perspective that is not correct or is not revealed in the first phase, actually you ruin your position, and actually it will not go with you any kind of with any kind of process. So you should be very transparent on the funding. You need to bring the ideation to the desk with all the materials behind. If you have any kind of IP protection, if you have any kind of document, for example, one of the things that our investor in Europe looking for is SOW of the product, state of work of the product, is comprehensive document that speak about the functionality of the product, the architecture, and if the product you can show to the investor that it can be scalable. You need to show the design of the product, the functionality of the product from the aspect of UI, UX. So all the technology, the CTO of the company should be well prepared with all these materials when it come to the investor desk. From other way around, if we are looking about the investor itself, I want to tell you that there is a big change on the market today, that the investors are much more hesitate to invest in companies. For example, we see more and more that investors are in the pre-seed seed, still looking for traction, looking for companies that they have some kind of market validation. But from other way around, from your perspective as a startup, our recommendation, based on my experience, of course, you need to make some kind of research about the venture capital angels that you are approaching. And today, in our public data that we can collect from the internet, from the web, from the LinkedIn, you can learn so much about the investors that you can understand what is their perspective, what could be their perspective about, should be their perspective about your venture. So you can go down details to their website. You can understand which companies they invest in the past, in which valuation. You can understand what is their investment thesis from the website that they are reflecting what they want to invest in, which sector, what is the ticket size. And to look about articles or any kind of post that they are some of the times posting especially in the LinkedIn. And from this analysis, and by the way, you can use AI today in order to analyze not only your venture, to analyze the investor that you would like to move on with. It can be venture capital or any kind of angels. So you need to collect all the data, and you need to understand what is the investment policy today for this venture capital or family offices. Because I want to tell you something from our experience. Some of the times we find out that the venture capital decided not to invest in any kind of companies because they complete all the investment round and they want to maintain and to leverage their private capital with their existing companies that they invest in the past. So you are trying to reach out to people that are not relevant because they are not interested now in fundraising, and they are not going to invest in any kind of companies. And you can get all these data from all these resources. Another thing that I highly recommend you to use, and not a lot of Israeli startups using that, unfortunately, is a big tip. There is a website or platform that you can use that called TechCrunch. That is a platform that bring up-to-date opportunities for startups to understand in which sector investor invest in these years, and typical companies that maybe you can find your competitors in these platforms that can help you to understand if you are on the right place, on the right timing to approach to investors that are, by the way, appearing in this website, and you can try to engage the right people to your venture based on all this data and information that you collect from this place. The second thing is the most important thing that any kind of investor asking himself is not what kind of capital I can invest in the companies, is what is the value that I can bring from my side to the company. And when you are trying to engage the investor to your company. Some of the times, I'll give you something that is very creative. Don't speak about only money or capital that you want to raise. Speak about what kind of experience and knowledge you are looking for. And investors will really appreciate that once they see that the founders speaking with them, that they will help them to open the doors in the right organization, to bring their business skills to the desk, not only capital. We call that, by the way, smart investors, that they are part of the advisory board. They are part of the decision that you should get. Once you are speaking in this level with the investors, that you would like to engage them to your company with their knowledge and not only with their capital, it will give you much more points and will give you much more credit to take the meeting to the next level. And we see that more and more, that investors want to contribute from their side and not only to bring money and to be silent in all this process. And this is the very, very important slide that some of the times is very important to speak about all these parameters in the platform that we built in UK. James, we will explain much more about it, but we call to these parameters BMQ, business maturity content, that speak about what is the key factors for investors once you come to invest. So first of all, dear guys, is to speak about the team. And some of the times we see a lot of founders, presentations, pitch decks that the team is only on the end of the presentation or in the middle of the presentation. I highly recommend you that the team will be on the front in the first slides, because in the end of the day, investors invest in people and not in technology. And once you bring the team, you need to show how long experience you gather from all these guys. Advisory board, what is their expertise? And the team is today, especially today, in this economic situation that we all facing today, the team is very, very significant point that investor all the time talking with us. Bring the right team. Maybe we can, this idea is not the best. We can try to make some kind of pivot, but bring the right people that understand exactly what they are going to do with a lot of experience behind. The second thing is the ideation, the product, the IP protection, the uniqueness of the product, the competitive analysis that you have done, the USP, unique point of sale that you can address, all these things that you are talking about competitors. What is your uniqueness? You need to put on the desk. One of the parameters that is the most crucial point in any kind of interaction with investors is product market fit. And I know, and we know, all of us, that once the company is in early stage, some of the times they cannot show our product market fit because they are on the R&D stage. But like Eric Ries, that wrote the book, A Lean Startup, say, go out from the buildings, go out to your clients, speak with them, try to understand what is the pain point. This is exactly what we are highly recommend to our startups. We are trying to put the clients and the strategic partners in the same level of the investors. They are not in the second level. They are in the same level. You need to try to engage as much as you can the early adopters, the potential clients that could be interested in your venture. And once you bring them to the table, it will be much more easy to engage the investor to your company. It's not from the other way around. You are putting your all attention in the investors, but in the end of the day, the investor wants to see that you can generate revenue from potential clients. So you need to try to find the balance, the right balance between investors and product market fit. And we highly recommend that to find and to characterize the target audience that you are looking for is very, very important and not less important from investors. And this is something, as long as you can bring LOIs or any kind of term sheet from any kind of clients to the investors, this is something that can improve your positioning dramatically. The next point is the resources. And of course, I spoke about it, to be very well transparent with the investor about your personal debts, about your personal equity. Some of the times the investor in the beginning asking you what is the cap table of the company and who are the shareholders of the company. You want to understand with whom he's talking, and it's something that is very important to be well prepared and not to say, we didn't decide yet, we bring the company now to your desk to raise capital, and once we raise the capital, we can structure all the business model and the business framework with our partners. It's not something that can work out. You should be well prepared with all the agreements with your partners, with the shares that anyone can get, and of course the cap table, existing cap table, and your financial position. If you have any kind of debts or you have any kind of loans that you got, you need to reflect it in these meetings. The next point is the business plan. The business plan is something that some of the startups think that is not so important for investor because they are not reading all 56 pages. I want to surprise you. Maybe they are not reading all the business plan. But the investor that we spoke with them here in Austria or in any kind of places in Europe, more want to see that this business plan exists and is created by the founders and the team, because this is the only document that reflects the commitment of the founder and the team to be part of this venture. If the business plan did not exist, maybe any kind of partners in the company talking in different language. But this is something that connects all the team together to one vision, to one roadmap, to one objectives. And this is the reason that I highly recommend to build a business plan. And by the way, the financial projection should be for 5 years and not for 2 years. And if you are pre-seed seed, in some of the cases, we see startups talking about 1-2 years ahead, but it's not right. You need to look about in perspective of investor for 5 years, because in the end of the day, any kind of investor wants to see after 5 years what will be the result, what will be the return, if it's an exit, if it's an IPO, M&A, or any kind of business results from your venture. So this is the reason that financial projection 5 years with a breaking point to show when the company come to the break even, and showing the revenue that they can generate along the years and what is the risk behind it. This is very, very important. And like I mentioned before, unfortunately, because of the situation now in the world, yes, in some cases, this is one of the criteria that the investor put on the desk and say, without traction, I don't want to meet any kind of startups. And we are getting that more and more. But from the other way around, there are some pre-seed investors that are willing to invest a small check of 100,000 up to 300,000. But in this case, once the investor putting very small check in your venture, you can ask them to join to your team and to take significant role in your team to take the company to the next level. And some of the times the company is talking about pre-seed round, but not speaking about the responsibility and about the role that the investor can take in the company. And this is much more important from capital. This is the reason that I'm saying in pre-seed, speak not only about capital, speak about experience, speak about business network, that you are looking that your potential investor will contribute to your company. The second part that investors are in general looking for, and we deal with it in the platform that called, in the end of the day, BMQ, business maturity content. We are talking about all the funding that you are looking for. And some of the times it's not clear for startups because they are talking, like I mentioned before, about the first phase of the funding. They are looking about the first pre-seed, but you need to look about 5 years ahead and to speak your exit strategy and what is the valuation in the beginning when you are starting your pre-seed seed and what is your expectation about your valuation in the following years in correlation to the revenue that you generate. So all the journey of the funding process that you are doing along the way, you need to address it in your presentation and not to put it on only in one slide. You need some of the times to put 2 or 3 slides that's speaking about the funding strategy of your company. And once the investors see that there is a logic, balance between what you talk about the product, about the market, about the team, but in the end of the day, you put on the presentation all the funding structure of the company, you understand that you have very comprehensive view to which place you want to take your company. So please, in this case, it's very, very important. We saw less and less startups putting that into account. And this is something that, of course, our platform that we built with James can help you to evaluate your company from this perspective. So in order to summarize my part about what is the reasons that startups fail when they try to raise capital, the first capital from investor, first of all, you need to think about your the segment of maturity. Maturity is all the things that we discussed today. Maturity of your venture, that is starting from the financial resources that you have, and coming to the team behind, the uniqueness of the idea, and what is perception about your competitors, and what is your perception about your valuation, how you see your valuation increasing along the way, how you can scale up your company and not to be only in one place. Some of the startups in Israel say, when we interact with them in daily basis, Kobi, we would like first to validate the product in the Israeli ecosystem. We want to see that it's working in Israel. It's a big mistake. From our perspective, it's a big mistake. Why? Because now Israel facing a very, very complicated situation. You can see in IVC online research that there is big decline of investment in Israel, especially in early stage. So you cannot say that because I'm living in the comfort zone in Israel, I'm testing my product or I'm trying to show some kind of results in Israel. No. In our approach, we are trying to have the companies to come to the significant place that is only 3 hours flights to test the product in the European market, and then you can extend your possibilities to raise capital from international investors, not only from Israeli investors. And this point is connecting to the business network that you need to create. You cannot be only focusing on the investor in Israel because it's very, very hard. We hear that every day. It's very hard to raise capital today in the Middle East. You need to look over the hills and to understand that some of the times you need to make some kind of steps out of Israel in order to attract your investor to your desk. The second thing is don't be narrow-minded and try to raise capital only from traditional investor like angels and venture capital or family offices. Some of the times you can look about grants or subsidies that you can apply. And in Israel, you have the IAA, Madan Rashi, that you can apply for Tnufa or for other programs. But in the end of the day, there is other programs, other grants that are available for you out of Israel. For example, in our place that could be available for you. You have in Israel very, very good companies. They're doing crowdfunding process and connecting investors in SPV mode, a special purpose vehicle, to your company, so you can use this Exit Valley. I think they call Exit Valley Together, and other companies, PeopleBiz. And this investor, the big advantage are that they are coming from the ecosystem in Israel, and you don't need to invest. They don't need to invest all the significant amount of the funding, because it's splitting between several investors in the same time. And the last thing is institutional investors. And here, לשכת טכנולוגיות המידע that I represent are very well connected to a lot of companies in Israel that could help you to test and to validate the product in their organization. And this is something like investment. Once you have a successful POCs and you have successful pilot that you are conducting in the Israeli ecosystem, it's something that can help you to reach out in the second phase, to reach out to potential investor to invest in your company. So use the institutions, use the network that we have, in this case, in לשכת טכנולוגיות המידע, in order to build this connection with this organization. And of course, this is our role in our Excellence Center of Entrepreneurship and Startups, בלשכת טכנולוגיות המידע בישראל, to help you to make this connection with this organization. And the last thing is any kind of investor want to see the collateral behind the venture. It means what is your commitment to the company, what is your strategy now, and what is your strategy in the long term. And of course, when you are coming and you bring yourself with a pitch deck to this meeting, you need to be very, very focused, and you need to be very professional to address in 7 minutes, some of the time 10 minutes, what is the idea that you have in your mind, and not to speak so much that can take something like 30 minutes or 1 hour, because the investor don't have the state of mind to be focused so much in one venture. You want to understand if this is the topic that is interested. If yes, of course, in the following meetings, you can give further information. I would like to present my partner in UK, James, that is actually bring his experience from the UK market and from other countries. And the good news that we have in our webinar today, that James built something that is very, very exciting, that help you to take all the theory, all the things that I spoke now in my part, to something that is digitalized and can show the uniqueness of your venture or your company based on the readiness level report that you can get from platform that can help you to understand if you are well prepared to the fundraising or you should improve your positioning. So before we come to James, if there is any kind of, in this part, first part, if any kind of comments or any kind of questions, please ask, and you can present yourself, of course, online, and you can ask via the Zoom, or you can send some questions via the chat, as you like. James, you can help me with all the questions.
Sure. There's one that's it's a bit more of a comment than a question in the chat from is it Anon that says, I find that most investors are taking a look at the company, they're looking for reasons why not to invest, rather than why to invest. They're looking for reasons to say no. I guess that is a common experience, I suppose, or a feeling that founders often have.
Yes. Okay. I agree. I don't know who wrote it, but I agree. Sometimes the investor looking why not to invest. But this is exactly what I say in my part. You need to understand what is the perspective of the investor before you are coming to this guy. based on a very deep research that you can do before the meeting. James, you want to add to what I say?
Yeah, no, I agree, Kobe, and I think this is why we built the venture analyzer tool because it's very hard for every founder, when you're speaking to investors and you get negative feedback, or you're getting a biased position because it's one investor and it's what they are thinking about. So, that's their feedback, and it's sometimes hard to understand, should I listen to that feedback or is it just the wrong investor? Do I need to find the right investor? And so I think that objective sort of feedback is quite difficult to get from investors directly.
Mhm. Other comments from other people? Okay. There is some Yaron Cheni. What is readiness? Maybe you can say something about it, James.
Yeah, so readiness, we talk about, being ready. So it is a level or a measure, I suppose, of whether we think you are ready to receive investment, or to pitch for it. And this also depends, I think, on the stage of your business. And you said before, Kobe, which I totally agree with. It's much harder at the proof of concept stage now. You used to be able to raise money on an idea, and that's becoming less and less these days. They want you to be very established. They want you to have much more traction. I think the risk appetite has really changed in terms of being ready, or what that looks like today.
Okay. James, please, the stage is yours. You can continue.
Sure. Thank you very much, Kobe. So, yes, a short, presentation from me. So my name is James. I'm the CEO and co-founder of a business called MyNexus. We basically make digital assessments to evaluate entrepreneurial skill, potential, investment readiness, which is how we got involved with GVI, and this application process. But essentially, what we built was a venture analyzer tool. So, as I said, there's a kind of a digital need, we think, for being a startup to be able to have this objective view of where your business maturity is and your readiness for investment. And there are no bad scores here. It's about setting a context for you and your business. So it's helping to understand, what that means for you. You can tell us whether that is a good score or a bad score compared to what you were expecting. So as Kobe's showing here now, this is the application portal that we built for GVI alongside Kobe. And how it works is that you fill in some very basic company data. You go through this venture analyzer questionnaire, which is the part where I said, we are scoring you. And this is a very simple, takes less than 10 minutes, sort of multiple choice venture analyzer based on, our experience of what investors look for, what the things are that they want to see, and in terms of milestones of just being a good entrepreneur. And then the third part of the portal is then a list of questions more about the business. And this is the bit that Kobe's really interested in, like he said, all of that stuff around what is your business idea, where are you operating, that market fit, the team, the resources, the traction, give us the insight and the information then, so that when I'm looking at your venture analyzer result, I can see, what parts of your business it's really referring to, or how well things are. One of the other reasons we created this tool is because I think particularly today with AI, it's even harder for investors to evaluate startups because every pitch deck looks great, every business plan looks well written, and actually to dig under that and to get into that sort of due diligence of, but what have you really done? How far are you along? Do you have the skills and the resources? That's a much harder question for them to answer, and they can't tell that really from your business plan or your pitch deck necessarily. Um, So we have 80 questions. They're grouped in these themes that are completely aligned to what investors, want to see. If you flick the slide on, Kobi, you can see here, this is sort of what I was talking about these scores. So, for each of these sections, this business maturity and the investment readiness, we will give you a score, like a little bit like a credit report or maybe a school report. And this allows you to benchmark yourself on where you think you should be. So, if you are a really early stage business, a proof of concept, then, we would only expect you to score low because you won't have developed all the things that, a scale up has. But similarly, if you're a scale up, and you're scoring a C or an E, then you would think, okay, maybe this is a problem because this is maybe why I have a gap in terms of, where I'm at. So it's very quick to get this insight. I think what we found is that founders really appreciate the insight because it is that objective view of kind of, it's a statement of fact of where you are. If we flick on another slide, Kobi, and this is an example of kind of what the report looks like at the end. So, the data that you give us, it allows us to kind of crunch some of the numbers a little bit, give you a bit of an analysis on a dashboard of, what those numbers are telling us from what investors look for, the kinds of things they're trying to understand. And you get these summary scores and detail so that you can see this is how I answered the questions, but also here's some ideas for how you could make that score higher. So these are the things that are holding you back or maybe are areas of weakness. And we have these two great PDF guides that go alongside. So one before you take the assessment that helps just explain what each of the questions is looking for or why we're asking it, if there's anything you're kind of stuck with. And then another that helps you interpret the report. So, a guide to understanding when the investors are looking at these numbers, what is it it's telling them? What is it we're measuring or how have we calculated certain statistics in the report? So, as Kobi said, I think that in the environment now, raising investment is really hard. And so it's becoming more important than ever. I think that founders and startups and scale ups can actually use their time effectively. So what this helps you to do is focus the areas of weakness or, kind of making sure that context makes sense to you. And that personalized feedback, it shortens that journey of getting it wrong, going to speak to lots of investors, trying to understand, is this feedback good or bad? Should I act on it or should I ignore it? So it really does, I think, alongside the great work that Kobi does, help to give you that insight. I think for me that's everything, Kobi. Unless you have some thoughts as well.
Yes, thank you very much. So the next stage, first of all, לשכת טכנולוגיות המידע, the Israeli Chambers of Information Technology that exists more than 40 years in the Israeli ecosystem. I'm sure that some of the people here are not familiar with. And I have the opportunity to meet you in person, not in person because I'm not based in Israel, but we can meet within in the following weeks in mutual and to make a mutual introduction for each other. And I'll tell you much more about the Israeli Chambers of Information Technology and GVI. So if you would like, you have here my contact details, and of course, we'll give you all the information about what is our plan for this year בלשכת טכנולוגיות המידע. And of course, if there is someone that personally want to interact with me, is more than welcome to do that. And this is the contact detail. If there is any kind of questions or any kind of inquiries that you want to ask, please, this is the time to do that. James, you can look at the chat if there is.
Sorry, I was sitting on mute. Yeah, there's a great question from Alon that says, analysis paralysis. We see more and more VCs that are afraid AI will replace or ease the startup idea or initiative. What is it? Are you seeing this? And what are your recommendations in terms of VCs, I suppose, that are not investing because they think, oh well, maybe AI is going to replace that startup?
Yes, first of all, I must tell you that maybe you can look at my LinkedIn. You can saw that I participated in a very special event in Vienna with an international investor that spoke about exactly about this point, how the AI can come to their desk in the right time, and it makes their lives much more easy to evaluate companies. And this is something that is, let's say, very stressful for any kind of startups because now everything should be analyzed by AI tools. And it means that you need to bring, like I mentioned before, what the AI not bring is the team behind the technology. And this is something that you need to show to the investors that you need to take into account that the investors are much more smart to analyze your venture from all the dimension. And this is the reason that in this webinar, we put all the segments that we need to be very, very, very careful and very professional when we are coming to the investor because the AI today change the investment policy. This is one point. The second point is that from the other way around, you can use the AI much more in order to collect the right data, to analyze your venture from all the perspective, and to be much more professional, not only to look like a very professional if you are creating some kind of pitch deck, but the content should be much more accurate. So use the AI in order to make some deep research about your venture, to analyze your competitors, but take into account that now the AI is bringing some value to the investor and they are now choose carefully any kind of startups because they have much more capabilities and options to analyze the companies with AI tools. You want to add to what I mentioned, James?
Yeah, I think that it is really difficult when, like you say, if you're speaking to an investor and they're looking at and evaluating a startup and saying, "Well, we're not sure if this business is going to exist in the future." That's a kind of reality, I suppose. I think that also, investment does go in trends. For a long time, everybody was investing in SaaS subscription-based, business software, and suddenly, that market has shifted and changed. So you do have to stay, with trends, and it can mean for some businesses or for certain startups, you need to focus on where your good investors are. So, maybe you have a smaller pool of investors to go and speak to because the area that you are in is very specialist, or most people are not investing in that. So it does make it harder, but it just means that I think you've got to focus really on what does a good investor look like for you and your business, and try and speak as much just to those people and don't waste your time, with the others.
Mm-hmm. Other comments that you see on the chat?
Yes, there's another question that's come in that says, can you also connect us to clients of various fields? So from fintech to access control, other verticals. I guess there's a question for you, Kobi.
Yes, we can, in a mutual introduction, we can set a mutual meeting between us and we can discuss about it personally with any kind of companies. You have my contacts. Thank you.
And I think there was just one other question that said, please comment on the importance of testimonials.
Testimonials. You can say that we are, in our case, we are talking about the platform that we just launched in the market. So we don't have any kind of testimonials, but we have a lot of companies that using this platform and reflecting their readiness level in the way that they was very surprised to see a lot of segments that they didn't take into account. And now they are improving themselves. And I'm sure that they will see the results in the future.
I'm just wondering as well if this question is guiding towards perhaps customer testimonials or testimonials, in order to get investment potentially. And I think that those can be useful. I think, to the extent that you have real customer feedback and you can show, that kind of traction. It is important to investors. To a certain extent, it is also a bit of less is more. I think they only need to see a few, and that's enough, to meet their kind of need, I think, in that.
Thank you. Other comments? No. Okay, guys, thank you very much for participating in this webinar. I'm really excited to invite James to this webinar to share with you his experience from his side. And if you would like to set up a Zoom meeting with us to explain more about לשכת טכנולוגיות המידע, I'll be very glad to explain about this organization and what is the benefit that startups can get from this organization. And of course, personally, I'm available for any kind of collaboration. Thank you very much and have a good evening and quiet evening in Israel. Thank you.
Thank you
Thank
all
you.
so much. Thank you, Leo. Thank you, Kobi. James, thank you so much for your time on a Sunday. Have a great rest of the day.
Thank you. And you.
Thank
Bye
you.
bye.
Thank
Thanks.
you.
Bye.
Bye-bye.